Which stocks should you buy in April? I've got 10 stocks for you today. In fact, I've got 11. I've got a bonus pick. And this is going to be rapid fire. I'm going to give you the stock pick, a quick description of the company, discuss valuation, then look at a chart and move on to the next stock. 11 total stock picks with the bonus stock. This is going to be a blend focused on growth, but there are a couple dividend stocks in here as well. Let's go. Zscaler recently sold off hard after earnings. Why? Deceleration in billings growth. Zscaler actually beat on both top and bottom lines, and there's been a lot of fear from investors regarding competition, saying that Palo Alto Networks is basically eating their lunch. And this is actually overblown if you understand both of the businesses. Zscaler has significant technology advantages, especially when you think of larger and more sophisticated customers. In fact, here's a quote from the CEO. In terms of competitive positioning, we haven't really seen any changes. In fact, I would say that on the higher end of the market, we actually feel like we are stronger than ever before because we have established that. We have the right architecture, solution, and thousands of customers well deployed and very happy. And if you look at towards the bottom, it talks about a large retailer, 20,000 stores, and for over 18 months, they've tried to deploy their own firewall-based solution. They couldn't get the job done. They eventually gave up, and they went with Zscaler. So Zscaler, think cybersecurity, scalable cloud platform. Listen to this, 280 billion daily transactions. That's over 20x more than Google searches. Think about that for a second. So they call themselves the leader in secure digital transformation. If you look at the numbers here, over $1 billion in annual recurring revenue, 52% growth year over year. That's solid. And you can see on your screen their global footprint, 150 plus data centers, 200,000K plus security updates per day, 11 consecutive years of Gartner leadership. You can see it was up 4% today. It's at $116.83. Now, of course, this is a SaaS company. It does not have a PE ratio. So the EV NCM revenue, that's going to be 8.9x. Net dollar retention, 125%. Rule of 40, 72%. And free cash flow, positive 21%. This is a mid-cap, $16.29 billion. And of course, being software as a service has very nice profit margins, so 81.41%. And it's down over 53% over the last 52 weeks. And you can see strong growth across the board. So looking at a chart of Zscaler, you can see this thing got all the way up here to almost $400 a share. It's around $377 a share, and it fell off a cliff. This was back November 2021. You can see it came all the way down here. It's under $100 a share. So something to point out here, if the entire market sells off, none of my technical analysis is going to matter. But as of right now, this has $101 support. Assuming the market stays bullish, look for $130 plus on Zscaler. So the next stock, what I did is I went into Discord and I asked the community, what stocks are you buying right now at these levels in April? And two people from the Discord community told me Vertex Pharmaceuticals. So shout out to Dave and Philly Guy. It actually has a PE ratio. I'll show you the metrics here in a second. So on March 27th, Vertex Pharmaceuticals announced a collaboration agreement with CRISPR Therapeutics. And this is to use their gene editing technology, which allows researchers to modify an organism's DNA and develop potentially curative therapies. So why did Vertex decide to do this? Vertex saw firsthand the capabilities of Exocell. So Vertex focuses on validated targets that address casual human biology. And you can see their pipeline here with 4 products launched and lots in the hopper. So Vertex, ticker is VRTX. Now this one does have a PE ratio 24.35. It's a large cap. It's around an $80 billion market cap. This stock is up 21.69% over the last 52 weeks. You can see solid growth across the board. So this does have a price to sales ratio of just under a 9. Price to book's 5.77, so it's not cheap. And this is why you look at more than just one metric. And then the PE ratio for next year's estimate is 20.3. So this one, you guys, you can see it bounce really hard off the lows here, $176. This was back here in October of 2021. It was down at these levels and it's ripped all the way up here. So you do have to be careful with this. There's a lot of excitement around this company right now. It does have $300 support. You can see it's in this channel. It slightly broke out of this channel and it's fighting back up. It's a little bit over half through that. I'd probably watch for it to consolidate a little bit here. So I drew up this blue line. I'd like to see it come closer to $300. It's probably going to hold 305. Of course, again, if the market sells off 10%, none of this is going to matter. But assuming a bullish uptrend, I think it will continue to go higher, but it might consolidate a little bit here. So in the month of April, I'd look at this stock between $300, $310 and dollar cost average. The next stock is Paycom. This is another SaaS company focused on HCM. So their platform includes everything from talent acquisition, labor management, payroll, HR, and more. And here's the CEO. This is from the 2022 shareholder letter. As we prepare to celebrate our first quarter century as a company, I couldn't be more excited with where Paycom stands. We continue to see strong demand for our product. We'll be pursuing numerous innovative opportunities in 2023. With an approximate 5% of market share, we have plenty of runway ahead. And of course, this is a smaller software company. It's going to compete against companies like Workday. Annual revenue, you can see 2020, $841 million, nice growth. 2022, $1.375 billion. That's up 30.3%. Now, typically with SaaS companies, you're not going to have a PE ratio. You're usually going to look at an EV NTM revenue. This does have a PE ratio at 61. So it's expensive, but remember, they have recurring revenue. And that recurring revenue, generally investors are going to pay a premium for that. This is a mid-cap stock, about $17.9 billion. It's down about 15% on the 52-week performance. Next year's PE ratio, 29.6. And this does have a PEG ratio of 2.4. It's got strong margins and profitability. Strong growth, green across the board. That's what you want to see. So Paycom really is a high quality SaaS company and it's not really that expensive. And here's the chart here. You can see that it's kind of held up here. It bounced off 265. I think this is probably going to go higher. I drew up these two blue lines. I think you can see it extend over 325. Now you do have to be careful. You can see this bounce really hard, but it does have momentum. And if you look here at the Fibonacci retracement, it's probably going to come up right in this level around 325. So next, I want to bring a high quality dividend growth stock. Now this one's been beaten down and several members in the Discord community have been buying this. UnitedHealth Group. So this is a slow and steady winner. It's really a DGIF type play. And I've owned this stock for close to 10 years and it's done really well and it always performs regardless of the market situation. The company has over 340,000 employees. It serves more than 146 million customers. And listen to this, UNH executes over 1.1 trillion health-related transactions annually for billings. And this is not a cyclical business. It can do well in a good or a bad economy. The reason you're seeing it sell off is people are selling these kind of stocks to buy growth stocks. So part of their business is Optum, 101 million unique customers served, $124 billion total prescription spend managed annually. And of course, they have the United Healthcare part of their business and 13 million people served through United Healthcare Medicare plans, over 100 state-specific programs served. So right now, UNH is trading at 472. It looks like it's up 2% after hours. It does pay a dividend, 1.4% dividend. It's a mega cap, $438 billion market cap. And you can see it's down about 10% over the 52-week performance. And this isn't like a hyper growth stock or anything, but it has solid growth and it's performed very well. Look at this number here, guys, $23.4 billion in free cash flow. This is a rock solid balance sheet and it's a high quality company to add some diversification to any portfolio. Based on next year's estimates, it's trading at 16.6 PE ratio. So in case you're curious, anytime you see orange, that's a previous chart day. Yellow is the most recent chart day. Every single Wednesday, we do chart day in Fired Up Wealth in the Discord community. And if you're interested in joining us every single Wednesday, check out patreon.com/Fired Up Wealth and join Elite or higher. But just this Wednesday, this last chart day, a member picked UNH to look at, and here's what we said. So we said no change and decent chance that it bounces above $500. So if I pull up the Fibonacci retracement of this one, you want to be buying in this red zone here. Now you can see where the green ends. It's about where it's at now. So you might see a little bit of consolidation here. It's going to take some time to go up. So when I say that it's going to go to 500 plus, it might not happen very quickly. It could take some time, but it is working its way upwards as long as the market stays bullish. So let's pick an e-commerce play. And this is one that you either love it or you hate it kind of a thing. This company had monster revenue gains in 2020 and 2021, of course, from the pandemic. And Etsy's revenue did slow down a little bit last year and the stock has been under pressure. And there could be more macroeconomic headwinds for this company. So it might not be the bottom yet, but I'm going to show you the price level that I like it at. So if you're not familiar with Etsy, they did have 10.2% year-over-year revenue growth to $2.6 billion. So the growth has slowed a little bit. They continue to invest in the business. They have 89.4 million more buyers. Active buyers up 95%. We have become more of a habit. And I do like Etsy. I use Etsy myself to buy certain things that I can't find anywhere else. They've also acquired these companies. So Reverb, Depop, and Elo7. And they have a cash balance of $1.2 billion. So Etsy no longer has a PE ratio. It did for a while, and now it doesn't. It's trading at about a $13.5 billion market cap, so it's a mid cap. It's down about 19% on the 52-week performance. So the price to earnings, or the PE ratio for next year's estimates, though, is 31.7. And here it says this year's estimates is 39.9. And the price to sales ratio is about a 5.35. So Etsy broke $100 very briefly. It got down to $99 and change. And it probably bottomed short term, assuming the market holds up. Now, this is under pressure under $112, and it got pretty much to that today. So you'll probably see some consolidation around where it's at now. If this dips back down, say to $105 to $110, that's where I'd probably buy it. I prefer this stock under $100 a share, but you might not see that, especially if the market continues to go higher. If I'm investing in this long term, though, I think this is an opportunity at these levels. And on the upside, you probably see $119 and then $130 here on that top blue line. So this next stock is another DGIF stock, and this one does have some risk behind it, so you have to be careful. They had a recent acquisition. There was also a short report not too long ago on this one. It's MGPI is the ticker. It's MGP Ingredients. In a nutshell, what's going on is they acquired a company called Luxco. And there's a lot of shorts out there. So this has high short interest, and it has for a little while. So MGPI has been under attack by Spruce Point, who's a short seller. Now, this isn't the first time that Spruce Point's come after MGPI. They did it back in 2017. But they're basically saying that this merger with Luxco isn't really panning out. But when you look at their overview, they have distilling solutions, branded spirits, and ingredient solutions. So here's a quick snapshot of distilling solutions. You can pause the screen if you need to. Branded spirits, including Yellowstone Bourbon, Remus Gatsby Bourbon, Old Ezra, and so on. And here's the whole family of branded spirits. An established portfolio with a focus on growing high potential, high margin brands. And then here's ingredient solutions. So this is going to be specialty wheat starches, wheat proteins, and so on. They're expanding this. I think this is an exciting part of their business. And you can see some of the products they've launched. You can see Beyond Meat and Garden Burger and so on here. I think there's a lot of opportunity within this segment. So shout out to Pitbulls Need Love from Discord, because he picked this one. It's one that I've been following for a while, and I've had it in other videos, but I've never actually owned the stock. It's trading right now at about $97 a share. You can see it was up 2% today. It does pay a small dividend, so this is going to pay about a 0.5% dividend yield. It's a small cap around a $2 billion market cap. Now you have to be careful. I told you about the short interest. You can see it's 15.82% still short interest. And this trades around a 19 PE ratio, so it's not crazy expensive. You can see the stock is up about 10.5% over the 52 week. It's got a 1.93 PEG ratio, 2.6 price to sales. PE based on next year's estimate, 16.9. Growth has been pretty solid overall. You can see the EPS growth is going to be projected down about 30%. And that's put some pressure on the stock as well as the short report. So back on chart day, this stock was running way up here. It was about $126. And I told somebody on chart day, I said, I drew this up and I drew these trend lines and said, you want to buy it on this bottom trend line. These yellow circles are representing how high off of that trend line it is. And I told the gang when it was $126 a share, wait for it to come back closer to reality here. And it's done that. In fact, it even broke that trend line, got all the way down here to about $90 a share. Now this does have some risk and it could go lower, but I like this stock even at this price now. Under $100, dollar cost average. I'd prefer this stock closer to $80, but you might not ever see it. So use some caution with this one, but right now I think it could bounce to over $100. It could go to $110 a share if the market holds up. All right, so next up here, I got to give props to Boiler Up. He picked Generac, ticker GNRC. And you can see 2022 net sales growth was 22%, net sales of $4.6 billion. They have 9,500 employees. Here's a quick snapshot of their business and what they're all about. Pretty solid track record of growth. So this is talking about mega trends and how Generac could benefit from these different trends. And they're trying to build an ecosystem. They've been acquiring a lot of different companies. You can see on your screen what they're really dealing with here. They're trying to build this entire ecosystem. And here's a list of acquisitions. This is just from 2017. There's a lot more if you go back. So GNRC was down about 3.5% today. You can see it's trading about a 21 PE ratio. Market cap on this one, it's about a $7 billion mid cap. You can see this is down 64% over the 52 weeks. So there's some opportunity here, I think, especially for longer term investors. And you can see why the stock is down. Growth has slowed significantly and it's impacted the share price. The company does expect to see improvements the back half of 2023. So it could be a good time to enter the stock, especially if you're long, you're going to hold it for a couple years. You can see the PE based on next year's estimates, 13.8. So back in December, this stock got down to about $86 and we were buying it in Discord around $90 a share. And I think this is a good price to enter this stock if you don't own it. And there could be more volatility, but this is generally where you want to buy and ride up. And it seems like a solid buy. buy even where it's at now, a little over $100 a share. If you can get it close to 100, I think it's an opportunity for long-term investors. You generally want to buy in the red or lower, kind of ride it up. You'll probably see it find resistance around $125 on the upside, assuming the market stays bullish. But keep in mind, this stock has poor sentiment, so it could have some volatility for a while yet. For me, it's an opportunity to accumulate this type of a name, thinking longer term. All right, next, shout out to Derek for picking this one, CRISPR. So the biotech company's first potential product could hit the market soon, Exicel. And their gene editing process could really be a game changer. And it could change the way we treat diseases. So this could be a bagger stock even from these levels. So here are some of their highlights. We don't have time to go through it all, but just kind of rapid fire here. If you want to deep dive on any of these stocks, guys, just drop me a comment below. I'd be more than happy to take more time and go deeper on some of these. And here's their pipeline. This is really important to understand when you're investing in the biotech space. Experienced management team, $2 billion cash balance, end-to-end capabilities. So you can see it was up 2.4% today, guys. This is going to be a small cap, $3.5 billion market cap. This is going to be a spec stock. You're really speculating that some of these products are going to be home runs. You can see the short interest is 15.72%, so be very careful. It's down 31% on the 52-week performance. Price to book, 1.85. And price to sales, 2,874.63 because they don't have any revenue. So again, guys, this is going to be a spec stock, speculative, all right? So be careful with this, but it looks good right now on the charts back to $50. It seems to be a good spot. It really does. The algos have really kind of held this $42 level here. And I think if the market stays bullish, it probably bounces back up to that $50 range. So I've got two more stock picks and a bonus stock. But before I go on, I need to announce this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, guys, they don't tell me what to make or what to say. I'm an independent analyst, and if you want to support me and my work, you can join us at patreon.com/firedupwealth. So this next stock is a bit speculative as well. It does plan to grow about 65% this year, but it's been absolutely hammered. And most recently it was hammered because it plans to sell $175 million in convertible senior notes due 2030. So you can see STEM's down about 51% over the 52 week. This is a high risk, high reward stock. It's a micro cap, $850 million. It doesn't have any profitability. Valuation, 2.3 price to sales. For me personally, I like buying spec stocks when they're beaten down like this. High risk reward, could be a 10x or a 0 type play. According to Fidelity, price to book 1.54. To me, this is attractive. So you can see it sold off really hard this week. It got down to like $4.60 or something. It's bounced over $1 a share. I think it was way overdone. I still think it's an opportunity even at these levels. The next one, guys, is HashiCorp. Now, I'd like to spend a lot more time on this, but we're going to run too long. So if you want me to do a deep dive, drop me a comment. I'd love to cover this one for you. This is going to deal with cloud. Now, this is more of an open source type company. They're doing a lot of exciting things, and I probably need to do a deep dive. Drop me some comments. This is a small cap, $5.3 billion market cap. Now, if this were a true SaaS model, I would use that EV NTM revenue, but since it's not, I'm going to look at price to sales, 10.95, so it's not cheap. And with HCP, you can see it's following this trend line. I'd like it to come a little bit lower, but it's not going to do that. It looks like it's going to rip from here. It's still below the moving averages, and I think it's going to climb back up to $31 or so. And so next I want to cover one quick bonus stock, but I want to tell you that a lot of these stocks have ripped pretty hard, so just be careful. So bonus pick, Crowdstrike, $124 support, look for $150. If this was helpful, guys, make sure you drop a like, drop a comment. Appreciate your time and attention. Have a great rest of your day. Take care.